good morning. Good morning. I'm Yogeshwar, your instructor for the day. Welcome to Pathfinders trainings. And Sunday morning, Sunday morning people sleep late, they relax, they watch TV. And what I see is that you have got up in the morning and say, let me understand something about this stock market. If there is any money here at all. And I saw before the workshop, some of the people, most of you are strangers to each other, very animatedly discussing with each other, I deal in cash, what do you deal in? And a lot of people are interested into this market. And what I see is that you are serious about your time. Everything else in life is a variable. Money comes, money goes. People come, people go. Things come, things go. Places come, places go. There's only one constant in life, and that is the 24 hours that you get every day. And what you do with that 24 hours decides what happens to your life. How much would be your bank account, what house will you live in, with whom you will be married. Everything is hidden into those 24 hours. And you can do only two things with your time. You can either spend it or you can invest it. Only two things can be done with time. A father comes home late in the night, had a tough day, rude boss, work pressure. 10 o'clock when he comes home, traveling in the train, he's squeezed like a lemon. And as he's about to crash on the sofa and have his dinner, his 14-year-old son comes out and says, Papa, I've got a maths test tomorrow. Can you help me with it? Now this man has to make a decision. One is an easy decision, another is a difficult decision. Easy decision is very simple. I'm very tired. Ask your mom, she will help you out. Eats his dinner and watches his TV. This man has spent his time. The other choice, the difficult choice, but the choice of growth, he says, for the whole day, whom do I work for? For them only? And if he needs my half an hour and I'm not available, what is the point of my working those 10 hours? He says, give me 15 minutes, let me relax a little. Then we will sit down and do your maths sums together. Within half an hour, father and son are having a ball of a time solving maths together. What has the man done? He has invested his time into a relationship. You can put your time, into various kind of activities, but the key is ask yourself the question, out of the 24 hours that I had yesterday, how much of the time did I spend and how much of time did I invest? Just keep yourself asking this question day after day after day, and if the time you have invested, you can invest in health, you can invest in relationships, you can invest in earning money, you can invest in understanding yourself. But the key is, what do you do with your time? Today, you are all here for the stock market. This is the area of interest that you have come here for. You have chosen to invest your time in trying to understand this market. But are you really here for the market? And the answer is an astounding no. You're not here for the market. You have come here for the money. This is a blunt fact. You're not here for the stock market. You're not here for the Tata or the Bata. You are here for the money that it promises. And whatever form it gives you, you will be happy about it. Now let me go a little more deeper and ask whether you are here for money. And the answer would be not only money. You are here looking for a first or a second source of income. What is the definition between money and income? Let's understand this. There is money in lotteries also. There is money in gambling also. All those promise money, and they don't promise thousands and lakhs, they promise crores. But what is the chance of you getting that money? Very, very thin. Very less actually. Can you ever do say, this month my house I'll run on lotteries, enough of this job. I'll just buy 10 lottery tickets and one of them will come true. I will earn crores of rupees. With that, I will run my house every day. Can you plan like that? No. But you can plan with your salaries. Whatever your salary is. 20,000 a month, 50,000 a month, lakh rupees a month, 2 lakh rupees a month, 3 lakh rupees a month. This is the range of the salaries in India. This is the average range. But with your salary, you can plan your house. Why? Because you get it every month. You know how much you will get. And based on that, you can plan your expenses. The only reason for incomes is because there are expenses. Incomes take care of expenses. So till the time that money does not convert into an income, it is of no use to you. Let me define income. What is income? Income is that money which is consistent in terms of amounts and in terms of frequency. For example, your salary is an income. So consciously or unconsciously, you're all here looking for a first or a second source of income. That is why you are here, knowingly or unknowingly. And stock market promises a lot of money. Everybody had a winning trade. If you have been into the market, there was that day when you bought that stock, it went up, gave you 10% and you were very happy. But then there are also days when things did not go in your favor and you suffered a loss. So profits, losses, profit, losses. And the end result is hardly anybody is there for whom, trading actually becomes a source of income. And everybody else is educated, you do good jobs, you are respected into the society, but somehow here you have not been successful. This is the rosy picture. This is the UBS trading floor. More than 10,000 people, sit on this trading floor every day. And, they trade stocks, futures, commodities, options, forex. They are into the middle class and upper middle class. This is in US. And these people, they are absolutely trained. On every 200 traders here sitting on this trading floor, there is a mentor who guides them on an everyday basis. He himself is a trader. He continuously tells them what is changing into the market, how you should move in, how you should move out. And these people trade the world markets. They don't trade only the US market. They trade our market. They trade China. They are trading Brazil. They are trading UK. They are trading Europe. And these people are extremely trained. Know every move of the market here. And you are competing against these people. Imagine if you are not trained, what is your chance of winning here? Absolutely zero. Stock market is a zero-sum game. If somebody loses 10,000 rupees, then somebody makes 10,000 rupees. And it is emotions that play here. If somebody wants to buy Reliance at 820 rupees, why is he buying it? Because he believes that the price of Reliance will go up. How about the people, who are buying or selling it to him? Why are they selling? Because they believe that the price of Reliance will go down. Otherwise, why will they sell it to him? So every trade is an emotional trade. The chances of success, 90%, 80%, forget it. A 60-65% success rate, if you know what to do here, is good enough to create a source of income into the markets. And what do everybody, give you? Sir, give your money to me. My success rate is 95%. My success rate is 90%. That's all crap. Some people will come to you. This is the new thing. Sir, I have this magic software costing only 80,000 rupees. You just purchase this software, sir. And the method is very simple. The signals are generated here. The moment the stock generates a green signal, you buy. And the moment the stock generates the red signal, you sell. Sir, ye dhyan se sun lijiye, this is the most important part. Green you buy and red you sell. And they're looking at him like this, as if it is E is equal to MC square of Einstein. And he will sell it to him, go away. They would have asked him one simple question. Hey guy, this is so great. Why don't you, trade your money on it and become rich yourself. Why are you, morning to evening selling it to one person or other, and ask the same questions to your tip providers? If your tips are 90% accurate, why don't you trade your own tips and become rich? There is no magic software. There are no shortcuts. Because your money situation is hard at the other place where you do not have any control over it. That's why here you are looking for shortcuts. And the whole market is full of people who are willing to give you shortcuts. And those people are everywhere. Even the break, when we'll have a tea break, there will be one or two people who will come to you. They come into every introductory workshops of mine and they will try to sell you their products. Buy my nifty tips, sir, buy my this, buy my software. Why go sir's way? This is hard work. I'll give you a simple method to make money. And ask them the same question. If you know that, why are you here? Why are you sitting home and making money into this? It doesn't exist. Sorry to break your dream there, it doesn't exist. But what kind of incomes can we expect here? We have come here with expectation of 15 to 20% a year. This is the normal expectation of people from the market. Is that a right expectation? That is too low. That is too low. If you are coming into these markets, you want to generate incomes here, first or second. If you come here to generate a second source of income, if you're already doing a job, you should be expecting at least about 10% per month. And if you want to take it as a full-time profession, where you only want to do this, you should be expecting about 20% a month from this business. Anything less than that would be coming here and wasting your hard-earned time and well-earned money. If you have to come here for 15-20% a year, I would suggest you don't come to the markets at all. You instead work hard and do your job and try to get a 20% promotion per year. That would be more fruitful. And what I see people is, even in the jobs, they're trying to do intraday trading. Don't know the short side of the market. A husband doing intraday trading for the whole day. 3:30 the market closes. The husband comes home, and just by looking at the face of the husband, the wife can tell whether the market went up or the market went down. Correct? This is what happens. So, when you are coming, this market has changed. The market of 1980, the market of 1990, the market of 2000, and the market of 2010 are entirely different markets. From 1980 to 1993, what was ruling was offline trading, brokers, very high fees, and there was no computers, nothing, and there was no national stock exchange, and we had scattered exchanges all over, India. In 1993, the National Stock Exchange was formed, and electronic trading started in India. In 1995, options trading was started in India, and they were basically started as a hedging product. Then in the year 2000, the derivative trading was legally allowed in India, and people could trade futures, they could trade options, they could trade the long side of the market, they could trade the short side of the market, and most importantly, the outside world was allowed. FII term was initiated, then we had big operators, big money that started flowing in India, and from 2003 to 2008, we had the biggest bull run ever. Market went up and up and up, and that was the first time when power shifted from the institution into the hand of the common man. Because the cost of doing business became very less, brokerages came down 0.5%, 0.6% from 5%, and people could do trading sitting from their homes. Online platforms were developed, and everybody was there. Then came the Reliance Power IPO. Remember our power? After there was no power left in the market. Came 2008 and boom, crash. And whatever you had earned from 2006 to 2007 all went away in 2008. And after that, everybody is so scared of this market. आते हैं, भाग जाते हैं. आते हैं, भाग जाते हैं. Because most of the people don't know what to do into this market. Let's understand what has happened. Let's understand the very basic process of this market. This is an important slide. This is the turnover of the National Stock Exchange this Friday. Let's look at the products that are there. This is equities, your traditional stocks. And the turnover in equities on Friday was 13,000 crores. How many stocks are there? About 1,500 stocks. Combined together in 1,500 stocks, there was 13,000 crores of turnover. Then next is index futures. How many index futures are there? Only two. Nifty and Bank Nifty. And in two together, how much was the turnover? More than that. 15,000 crores. Then if I go further down, I look at stock futures. How many stock futures are there? 265. Not 1,600, 265. And together, how much was the turnover in them? That was 21,666. Almost 75% more than the stocks. If I go further down, there is currency futures. Out of 4 pairs that are traded on the NSE, the prominent pair is only one, USD INR. And the turnover in just one pair was 5,814 crores. And there's one more market which is not traded on NSE. It is traded on MCX and NCDX, and that market is the commodity market. And the turnover of commodity market on Friday was more than 25,000 crores. It's already the biggest market in India. So we see out of the total, maybe 70,000-80,000 crores that changed hand in India on Friday, only 13,000 crores was in stocks. And because everybody is interested, a lot of you have dabbled into the market, you have bought stocks, you have bought futures, you have bought options, everything you have done. But somehow, if you are not able to convert it into a source of income, isn't that a waste of time and a waste of money that you are putting into this one? So today, we would not be talking about money. We will be talking about how to create incomes from the stock market. Not money, but how to create incomes from the stock market. And stock market, everybody is interested, but till you understand the very basic concepts of money, you won't even scratch the surface of the stock market. So let's understand that a little. This is your challenge number one. Your challenge number one is inflation. What is inflation? Inflation is a continuous devaluation in the purchasing power of your money. Today you might be earning 50,000 rupees a month take home or a lakh rupees a month take home. Just go back one generation back and see what kind of a salary in a similar position your father was earning. It was probably anywhere between 8 to 15,000 rupees a month. Those were the salaries of your father, and he was also doing fine. He raised you, he sent you to schools, you did well. Go one more generation back. What were the salaries of your grandfather? Probably 500 to 1,000 rupees a month. And he also ran his house very well. He raised your grandfather and they also did well. So what is happening? With every passing time, money is getting devaluated. It is getting devaluated. And why is it happening? Because this is how money is. Money is nothing but a medium of exchange. It replaced barter thousands of years ago, and now because things are unequal, we need a medium of exchange to exchange the things, and that medium of exchange is money. As the population is increasing, as the desires are increasing, as the things are increasing, that medium of exchange, loses value, and that loss of value is called inflation. Let's understand it very simply. Petrol used to cost about 6 years ago about 28 rupees a litre. Today, petrol is about 80 rupees a litre. So the price of petrol went from here to here. But has the litre become so big now? Was liter earlier this much, now it has become this much? No, liter is exactly the same. Good milk, we drink it every day, used to cost about 12 to 15 rupees a liter just a few years ago, and today good milk costs more than 40 rupees a liter. And then also you're not sure whether it is pure or not. So your purchasing power has reduced. Government gives you figures of 7% a year and 8% of a year of inflation. That's an eyewash. The real inflation in any developing country, also in our country, is about 15 to 20% a year. Go and look at the price of vegetables that you are paying, how they are increasing, the education that you are paying for your children, look at the travel expenses you have. When you go for a vacation, that room cost has increased by more than 20% every year. So one thing is for sure, if every year your incomes, your money is not growing by at least 25% per year, you are actually becoming poor every year just by that. That's why those FDs and those LIC policies cannot make you rich, because they are not even capable of holding the purchasing power of your money. What does your FD gives you? It gives you 9% a year. And what is the inflation? Minimum 15% a year. That means even if you are putting money into a FD, every year the money gets reduced at least by 6% in value, just by, and if you do nothing, it will be reduced by 15%. Many of you put money into LIC policies, money backs and others. What is the kind of returns they promise? 7% a year. And everybody puts on the policy money very nicely. You pay it year after year after year for 20 years and 30 years. And in the end, when that sum comes, it is hardly anything, because it has devaluated so much in value. This is what has happened to it. So these things look good, but they are not capable of holding the purchasing power of your money. And if you want your money to grow, you have to make it grow by minimum 20 to 25% per year. This is the minimum you should be getting into promotions every year, whatever job you are doing. This is the minimum. Your company profit should increase per year if you are, doing a business. And this is how much you have to increase your consultancy fees per year if you are into a consulting business. If you are not doing that, just by being there, you are becoming poor. And that's the reason you rush to the market. Let me tell you the very much psychological reason why you rush to the market, because in heart of heart you know this. That somehow all these means that are being thrown to me around are not good enough to hold even the purchasing power of my money. So I need to go somewhere where I can make my money grow fast. And that's the promise that is given into the stock market. Sir, give your money to me and you go and sleep. And when you wake up, the dream is very bad. Because you have lost a lot of your money. Because those moments do happen. Arcom went from 60 rupees to 155 rupees, back to 121 rupees. These moments do happen. So they promised, we will double your money. People dabble into option. Option, moves about 15-20% on an average every day. And on a good day, it even becomes doubles in price. All these things happen into the market. But since most of the people do not know anything, and they assume that somebody else is going to make me rich, you become dependent on others. And the first reason why most of you lose money into the market and why you cannot create incomes into the market is because of your dependency on others and your lack of education into the market. How does it work? Other solid reason why you should create a source of income here is because we had two solid support systems 15 to 20 years ago which do not exist now. What are those two support systems? One of the support system was pension. And other support system was a joint family. In a joint family, if somebody was financially not okay, the other brother used to take care of him for years and years. Father used to take care of him for years to years. That system is gone now. Not only that, there is a strong chance that if you really work hard on your son and a daughter, make him very educated, he gets brilliant 90% and above year after year, he would not be in India at all. He would either be doing a job in US, Canada, New Zealand, UK, where you will not be allowed to go. So that means you have a very high chance of having a lonely old age, and pensions are gone. You might be having a very well paid job, a great business, good consultancy, but what is the pension amount you will be getting at 60? Zero. And 30 to 60 is exactly the same number of years as 60 to 90. And at that time you will require more money, number one, inflation, and number two, because your health would not be great. Nobody will give you a job. This is a sad fact. Nobody gives a job to anybody who is more than 60 years of age, even if the guy is brilliant. So these are the facts that you have to plan. What is the difference between a successful man and an unsuccessful man? A successful man looks at least 20 years into his life. 20 साल के बाद मेरी जिंदगी ये होगी. An unsuccessful man cannot even look 7 days ahead into his life. So ask yourself, what category do you belong to? Are you willing to be successful? And a successful man is very careful about his time. What he does with it is time here. So when you are coming into the market, you can either come here the educated way, the proper way, or you can come here the uneducated way and the dependent way. Number one is where no incomes are created, and more than 90% of the people over a period of time only lose money into the markets. And other is to come the proper way, where your dependency on others is not there, and you can actually go and make incomes into this market, because this is what happens to your money. In 1967, 1,000 rupees a month. In 1972, you require 2,000 rupees a month just to have the same purchasing power, because the money value has become half. Albert Einstein called it the eighth wonder of the world. It is called the power of compounding. And in 87, 16,000 rupees a month. In 2002, 1,28,000 a month. All this right from here to here have exactly the same purchasing power. This 2,56,000 of 2007 and 1,000 rupees a month of 67 have exactly the same purchasing power. Number two, at 60, you will not have a source of income, no matter what your age is. Whether you're 25 or you're 55, the hard fact is at 60, you will become poor until unless you have at least about 5 to 10 crore rupees into your saving account right now. Then you don't need me. If you don't have that, then you need to create a second source of income, because you will need that, whatever it is. So, and this is why this 13,000 exists, because most of the derivative products are dependent on these. If their dependency on these goes away, even this 13,000 will become zero. So what has happened? Why are people no more interested in the stock? Who are not interested? You are very interested. The banks are not interested anymore. The FIIs are not interested anymore. The big players are not interested anymore. This market is not governed by you and me. This market is governed by those big players who have crores and crores of rupees, and they are competing against each other. In this market, one bank competes against another bank. One insurance company competes against another insurance company. And one FII competes against another FII. Your job is not to predict the market. Many people think I have to come here and predict the market. Absolutely not. This is not astrology place. You only have to come and understand the market and learn how to flow with the market. That's all you have to do here. But then if you want to make money into this market, you want to make that 10-20% per month, not per year, per month, You have to understand all of this now. Just understanding stocks is not good enough. And what is the primary reason? The primary reason is that in stocks, you can make money only when the price is going up. Stocks are not capable of giving you any money when the price is going down. But, in futures, in options, you can make money whether the price was going up or the price was going down. So most of the people, here are not comfortable with the short side of the market, neither you know the short side of the market. Let me give you an example. Let's take it recently from the Friday market. This is the market on Friday. Let's look at this market, just a one-day market. This is a one-day 15-minute chart, a Japanese candlestick chart here. I'm opening, and this is what happened to the market. The market opened here, went up, and then came down. If you are a so-called investor, happiness and pain. This is what would have happened here, because stocks are not capable of giving you money when they are going down in price. This one. But, this is where stocks can give you money. Here they cannot give you money. Let's take a stock and see what has happened. I'll also show you a future. Let's take two examples before I go further. Let's go into a stock, let's say Tata Steel. This is Tata Steel, and Tata Steel was down 1.61% on Friday. So this is Tata Steel. This is a 5-day and a 15-minute chart of Tata Steel. And this is Tata Steel for the last about 6 days. 1, 2, 3, 4, 5, 6. So the last 6 days, if you were trading Tata Steel, was it a good stock or a bad stock? If you were in stocks, you would be feeling the pain because you were losing money. Let's take an example between a trained trader and untrained trader. And let's take this as an example. This is what happened to Tata Steel. Let's mark the realities. It has come down from 419 rupees to about 384 rupees. This is what has happened to Tata Steel. Let's mark this. I'll show you future and I'll show you an option. Both. Tata Steel. It went from 420 to 385. Let me keep the calculation simple. This is what the movement that happens. How many rupees did it go down? 35 rupees. It was minus 35. And let's see, you bought 1,000 stocks of Tata Steel. You bought 1,000 stocks of Tata Steel and you just bought it in the hope that it will go up. What would have happened to your money? It would have been less. 35 into 1,000. How much is this? 35,000 rupees of loss. If you would have been trading a simple stock, this is stock, you would have suffered a 35,000 rupees of loss, because as per the property of a stock, it is designed to give you money only if the price is going up. Now, how much money you would have put? About 4,20,000 would have been into the trade, and on that 4,20,000 you would have lost about 35,000. But if you were a professional trader who knew how to trade stock futures, let's open here. Now let's, instead of this market which is equities is stock, I go to the derivative market and I again go to Tata Steel. And this is Tata Steel here, and in Tata Steel I'm looking at futures, the near futures, and this is the near future contract of Tata Steel. What is the difference between the two? The first Tata Steel belongs to Ratan Tata. The Tata Steel 30th January 2014 is a Tata Steel future which belongs to the National Stock Exchange. And this is a limited period product. which will expire on 30th January 2014, and this is unlimited period product, means you can hold it for as long as you want. And this hold it as long as you want is where most of the people lose most of their money. Now let's see the difference. In a future contract, unlike a stock, you have a choice either to buy the long side of the market or to buy the short side of the market. You can purchase both. In stock you can't. In future, if you purchase the short side of the market, you will make money only if the price goes down. If the price goes up, you will lose money. But in case it is going down, you will continuously make money. Other very important point to note is, in stocks, your cost of doing business is 100%. You have to pay the full 4,20,000 rupees to own the 1,000 stocks. But in stock future, since your ownership is limited, you only have to pay 20% of the total money. It is like renting a house or buying a house. When you buy the house, your ownership is full, you pay full money. When you rent a house, your ownership is limited, so you pay only a part of the money of the total house value. Same here, since your ownership is limited, you only have to pay 20% of the money. And with the 5 lakh rupees, the same 4,20,000 rupees, how much stock will you own? 5 times more. Since you only have to pay 20% of the money, this trader, instead of owning 1,000 stocks, his ownership is 5,000 stocks. So he owns 5,000 stocks of Tata Steel. So this is stock future now. Same money, eh? Both have 5 lakh rupees. Both of them have 5 lakh rupees. One is a novice, dependent on others, dependent on brokers, mutual funds and somebody else. Another guy is a pro. And this is stock future. And what direction does he buy? He buys the short direction of Tata Steel. The short direction of Tata Steel that he is buying. And in the short direction of Tata Steel, if I go here, what would have happened? He would not have 1,000 stocks. He will have 5,000 Tata Steel short. He has bought the short side of the market. What does it mean? Every 1 rupee Tata Steel goes down, he owns 5,000 stocks, he will make 5,000 rupees. So his calculation is that as Tata Steel goes down minus 1 point, he makes plus 5,000 rupees. As Tata Steel goes down 10 points, he makes plus 50,000 rupees. As Tata Steel goes down minus 30 points, he makes 1,50,000 rupees. And as Tata Steel went down 35 points, he made 1,75,000 rupees of profit. Ask yourself, which one do you want to be? Because every day this market gives you the choice. This is exactly the same stock, exactly the same movement, and exactly the same market. It is what choice do you make? Either are you trained or you are untrained. This is the choice of the novice and this is the choice of the trained. The good news is you don't have to be a bank or institution to buy these futures. Anybody who is an Indian citizen and who has a trading account and who has money into his account is eligible to buy a future contract, an options contract, commodity contract or a forex contract. Unlike US, where you require minimum amount of money to trade, in India, we're very lucky so far, there are no minimum amounts that are required. So why don't people make this money? Because they don't even know that this money exists. Let me show you one more example. If I go to this same Nifty, I'm taking this Nifty here, and let's look at this one-day movement of Nifty right from here to here. From this place to this place, if I see Nifty, this is the index of the market. It went from 6243 to about 6162, about 80 points down is where it went down. What is the percentage move? Less than about 1.5%. So 1.5% the Nifty went down just in a few hours. That is there. And if you were owning a stock, you would have lost 1.5% in that time. But if you knew how to trade options, For example, at that point in time, the nearest in the money put options was a 6,300 put. 6,300 put was a nearby in the money. And what would have happened to the same? Here it was down 1.5%. I go here. I again go to derivative. This time I go to the index, the Nifty. And instead of futures, I go to puts, which are option contract. And I go to a 6,300 strike well. 6,300 put I go. Let's see what happened to the same put when the market came down 1.5% exactly on the same day. This is what happened. The put is designed in such a way it will give you money only when the price is going up. So at the same time when the market came down 1.5%, the put went from about 100 rupees to 150 rupees. In how much time? 1 hour. So how much money was to be made and how much? Did you require lakhs of rupees to purchase this put? Absolutely not. The lot size is 50. You require just 5,000 rupees to purchase this put. And the beauty with options is downside is limited to the premium you pay and the upside is unlimited. It's a fantastic product to trade here. And in just 1 hour, you would have got 50% on your capital. If you were trading with one lot, the money you would have made would be 2,500. But if you were trading with 10 lots, 50,000 rupees of capital, the money you would have made is 25,000 rupees. Many of you slog for the whole month to earn that 25,000 rupees. This is the power of this market. And this power is being unleashed now. And you have a choice either to stick to your stocks or to understand the market in totality and create a source of income. And the good news is even whatever stocks you know are good enough because derivatives are dependent on the movement of stocks. Even if you have to trade a derivative, you have to understand the stock like the back of your hand. So this is the market that we are into now. And if you know what to do here, the possibility of you creating incomes is very, very high. So why give the money at all to anybody? In a bank, even if it gives you only 9%, it gives you a guarantee. You give your 9% to the bank in FD and they will give you a piece of paper, a written piece of paper. You put your money into LIC, even if 7% a year, they will give you a piece of paper. That is investment. There is nothing called investment into this market. What is the definition of the word investment? When you put your money somewhere and just by putting the money there, if the profit is guaranteed to you, then and only then it is called an investment. This happens in a bank when you put your money into FD. This happens in a LIC money back when you put your premium there. This doesn't happen in a stock because the mechanism is not this. In a stock, what is the mechanism? You first have to buy, then you have to sell. Buying is no guarantee of profits because till the time you have not sold it, everything is virtual in thin air. Only when you sell your stock do you know whether it was in profit or whether it was in a loss. But people still suffer from the old misconception, sir, I'm not a trader, I'm an investor. I don't do anything, I just buy nice good blue chip companies, hold them over a period of time, because over a period of time everything goes up. It doesn't anymore. That period stopped in the year 2000. Now only 10% of the money flows in stocks. How can they go up forever? There is a lot of money in shorting the market. Don't you think those banks will take it down also? So it cannot go up forever now. The structure of the market has changed. But since most of the people are not educated, so they still adhere to the old paradigm of buy and hold. And the results are disaster. Let me show you some blue chips and what happened to your money. This is Suzlon. Buy and hold used to be somewhere around 450 rupees. Today available somewhere around 10 rupees. You have lost more than 95% of your hard-earned money. And some people asked me, sir, Isn't this the best time to buy Suzlon? 450 रुपए का stock 10 रुपए में मिल रहा है. I said, I'll tell you, even cheaper one. Why don't you buy Kingfisher Airlines? उतनी सिर्फ वो वाला नहीं. I said, I'll tell you, even cheaper. Why don't you buy Shri Ashtavinayak, which is available only for 70 rupees, 143 rupees stock. So anything that can come down from 450 to 10 can also come from 10 to 0. These are the markets. Anything here can become 0. The bluest of the blue, Reliance Industries. About 6-7 years ago, you purchased it at 1600 rupees, hovering around 850 rupees now. 50% of your hard-earned money gone. If you would have put that money even in FD, it would have given you at least 9% a year. Why are people still holding it? Hope. Hoping that it will go up. Hope is the most dangerous word into the market. Your best friend here is a skill. Let me show you more. Arcom used to be at about 800 rupees roughly. Today available only for 122 rupees. That was the Friday price. Then what happens? Your hard-earned money is gone. Not only that, you are stuck. Your money is stuck. Please remember, in any business, if your money is stuck in a loss-making thing, your chance of doing business with it has also gone. This is opportunity cost that you have. Please understand, trading is about, making sure your money is being churned properly. Let's say there are two people. Both have a lakh rupees with them. The first one only knows how to buy. He bought Arcom, a few years ago and has lost almost, 70-80% of his value. The other guy was an active Nifty trader, stock trader, and he trades one Nifty contract every day. With a lakh rupees, he can buy 3 contracts. One Nifty contract has a 3 lakh value. That means roughly about 10 lakh rupees is what he trades every day, which is about 50 lakh rupees a week, which is 2 crore rupees a month, and which is 24 crore rupees per year. That means with the same 1 lakh rupees, he is churning 24 crore rupees in a year, but the other guy is stuck with his 1 lakh rupees and has lost almost 80% of his money. Optimum utilization of your capital is the keys to success in any business. There is nothing called investment here. Trading is a business like any other business. And you have to learn how to do this business. You need to have the skill to do this. Let me show you more. DF. When the IPO came, what was the tagline? Building India. Still building only in Gurgaon. Never build in India. What happened to your hard-earned money? From 1200 rupees down to less than 200 rupees, more than 80% of your hard-earned money gone. Praj Industries. Praj Industry went from 270 rupees now down to 47 rupees. I know a person, in 2007 his broker told him, sir, the stock at 270 rupees, ये कम से कम 500 रुपए पे तो जाएगा और शायद 1000 रुपए पे भी चला जाए. He said, how do you know? He said, sir, insider news. ये टर्म से हमेशा डर के रहना, insider news. So he purchased a lakh of rupees worth Praj. And after a few days, his broker again called him and said, sir, I have good news for you. He said, what good news? He said, sir, remember Praj that was available at 270 rupees and we bought for a lakh of rupees. It is available at a discounted price of 200 rupees only. And we should average it now. 270 plus 200 divided by 2. How many of you have already made this mistake? What he did not tell him was that the cost of doing business becomes double because you have to put 1 lakh rupees more to average it now. So he averaged it. Mathematics looked good to him. After some time, he again gave him a call and said, "Sir, मेरे को समझ में नहीं आ रहा है ये good news मैं आपको कैसे दूँ?" What good news? He said, "Sir, remember Praj we bought at 270, average at 200, is available at a throwaway price of 100 rupees only, sir. ये भाव दोबारा देखने को नहीं मिलेगा, हमको खरीदना चाहिए." वो भाव दोबारा कभी देखने को नहीं मिलेगा. Still at 47 rupees. You want to have some fun? Go in front of that person and say Praj, but run away. You know, because he's very angry at Praj. He's the vice president of a company. He makes good money from his salaries. He's successful, but somehow here, by being dependent on others, he lost money. You not only lose money, you lose your, self-respect. You lose your self-confidence. There are many different kind of losses that you incur when you lose money into the market. And one thing I know is losses are not capable of giving happiness, except one. There is one loss which is capable of giving happiness. It is called a weight loss. That is capable of giving happiness. Other than that, a loss into the stock market, absolutely not. Don't lose your money here. Because if you lose, it's hard-earned money. आपकी सैलरी में से आई है, आपके सेविंग्स में से आई है, किसी ने आपको दी है. Why go and lose it if you don't know what to do here? So let's be done. A few more examples. Unitech from 570 rupees down to 15 rupees. And where do most of the people buy? Do they buy here? No, they buy here on top. Why do most of the people buy on top? Because the top price is called the retail price, and the lowest price is called the wholesale price. You are customers to many products. You buy mobile phones, you buy groceries, you buy cars, you buy houses. What price do you pay for all the products? You always pay the retail price. You never pay the wholesale price, you always pay the retail price. And retail price is something you are very comfortable with. Not only that, retail price is also something that you are very attracted to. Because every time you have paid a retail price, you owned something. You owned a car, you owned a mobile phone, you owned a house, you owned some grocery. So the conditioning is, when I pay the retail price, I get something. And this is the mistake most of the people do. They pay the retail price to buy stock. They want to own the stock. And they are in the mistaken notion that owning the stock, the buying the stock will make me rich. No. Till the time you don't sell it, you can't become rich. So in this market, if you have to make money, you have to learn how to buy wholesale and how to sell retail. And this is what the mistake most of the people do. They always buy the top. And when they're buying the top, obviously, after that the price goes down, they average and they do the mistakes. We have a BHEL, same case, from 570 to 165. We have Coal India. A lot of people buy IPOs. I'll give you a very simple trick. Every time IPO comes, short it. 80% of the time you will make money. Because they already overpriced when they come into the market. You have to learn the short side of the market. Till the time you don't learn the short side of the market, you cannot be a trader and create incomes here. You cannot be dependent on one side of the market. You have to learn how to trade both sides of the market. Jindal Steel, same story. JP Associates, same story. SBI, classic. This is the same. People are still hoping. Names don't matter here. Don't think because it is a blue chip, it is a Tata, Bata, SBI, so it will make me rich. No, names are absolutely not important. You always trade a direction here. And your aim here is to create incomes and make profit. And the bottom line is, whether you make it from Tata or from Bata, it doesn't matter. As long as with the profit in your home, you can bring the atta. This is the bottom line. And if you can do that, then you are a successful trader, or else you are not. And this takes time to learn. It doesn't happen in 2 days. Don't look for quick fixes. There are no quick. This is Tata Steel, the same story. This is financial technology, another story that is building up here. There are nobody who is an investor here. Everybody is a trader. The only difference is, you can either become an intraday trader, or a swing trader, or a positional trader, or a long-term trader. These are the 4 choices you have. Is the tea ready? Check out. Okay. What is the difference? If you buy in the morning and you sell by evening, you are an intraday trader. Intraday trader that takes the risk of a day. He doesn't leave his money in the market by evening, he is out with his cash. Another trader is a swing trader. What is a swing trader? He buys and he holds it for about 10 days. And within 10 days, he squares off his position. So he risks his money for about 10 days. What is a positional trader? He holds for about 100 days. 1, 10, 100, 1,000. If you hold it for about 100 days, then you are a positional trader. That means about in 3-4 months, you are squaring off your positions. And if you're a long-term trader, then you're holding for about 1,000 days, which is more than 3 years. So people think the long term is more safe. No, why should it be? Look at the logic. In a single day, let's say State Bank of India, how much will it move? 2-3%? So what is your risk in intraday? 2-3% maybe. If you hold the same stock for 10 days, it might move 10%. So your risk increases 5 times. If you hold the same thing for 100 days, it might move 20% up or down. Kindly note, it doesn't tell you which direction it will move in. So the risk becomes bigger. Fluctuation becomes bigger. And if you're holding it for 1,000 days, more than 3 years, it might fluctuate 100% up or down and your money might become zero. This is what happened to these stocks like Arcom or financial technology. Financial technology is not falling now. It is falling from the last 3 years. So you have to see what kind of a trader do you want to become. You're doing a job, active job from morning to evening. You can't become an intraday trader, forget it. Because you cannot do your office work and intraday trading at the same time. But thanks to technology, like in my classes, I teach a method called spider trading method, which is an intraday trading method for people who want to do intraday trading, but they don't want to look at the market during the day. Thanks to technology, that is now possible. You can continue to do your jobs and still do intraday trading without being near the market at all. Then, very fruitful form of trading is swing trading, which you can easily do while doing your job, because you only have to look at the market maybe for 15 minutes in a day, just to adjust your stop losses, move your targets, trail it, whatever you want to do. You want to generate some wealth, you can go for positional trading, where you can catch the big movement of the market. You want to create a wealth, then you don't need to go for a long-term trading. And a good trader knows all 4 forms of trading. And when you're moving into the market, you can trade different kind of products. By being dependent trader, no you can't. But by being independent traders, you can trade stocks, you can trade futures, you can trade options, you can trade commodities, you can trade forex. And every trader need to have 10, critical skill sets. And you are here on your own. Don't look for shortcuts. As I reminded, even during this tea break, 1 or 2 people might approach you. कौन है ये मेरा card है sir, मैं आपको निफ्टी की टिप दूंगा, मैं आपको दूंगा सस्ता. Don't fall into that trap. Ask that guy, if you know how to make money, why are you here? Why are you sitting here? So, become a trader. Don't become a dependent trader, become an independent trader. In the second half, we will learn how to trade different asset classes, what are their properties, and I'll tell you about 10 critical skill sets which if you acquire, no power on earth can stop you from making money into this market. Let's have a quick 10-minute tea break.